Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here. But first, go ahead and visit the home page www.thetradinganalyst.com and start your 100% free 7-day trial today. All you need to do is enter in your name and your email address and you're going to get immediate access right now to all of the member benefits. For example, the live broadcasts, the chat room, daily watch lists, daily member videos, webinars, and an education from mentors like myself who truly care about your success. You're also going to be able to take part in the profitable trade alerts, which not only make you money in the market, but it's a great opportunity to earn while you learn to become a better trader on your own. It's a great opportunity and we'd love to have you. All right, so let's get into these charts here. First, we're going to start with Apple. So Apple here, a couple things that I'm seeing. We've got resistance here. Nothing's changed since the last video really, but we're just kind of reiterating. Resistance at 100.40, support at 97.70. And why is there resistance at 100.40? We've got the close of this candle, the close and high of this candle, and the high of that candle right there, and that's going to act as resistance. We've got support at 97.70. That's from the close of this candle, the high and open of this candle, the close of this candle, the close and open of this candle, the open and low of this candle, and then the low and open of this candle. So we've got some pretty decent support, 97.70. Where's support below that? Well, we've got a little bit of support at about 95.25 or so from the low. From the high and close of this candle, the high of this candle, the open of this candle, the close of this candle, and almost the low of that candle right there. So 95.30, 95.25. Now, if we break over this resistance up here at 100.40, we've got this gap to fill up here at 104. Now, me personally, ever since we had a gap fill, disregard that, not a gap fill. Ever since we had this false breakdown on Apple, I've been bullish on Apple, and I do think that it's very possible that Apple fills this gap up here. Okay, longer it takes though, the more I become less bullish on Apple. Now overall, if you look at the overall pattern here on Apple here, we've got a bearish pattern. We've been in a downtrend since April of 2015. So a little over a year we've been in a downtrend here on Apple. We've been making lower highs and lower lows right here. Okay, so when we come up here and fill that gap, well, I should say if we come up here and fill that gap, which is right around 104, that's going to be knocking into that downtrend line once again. So there's that downtrend line up there right around 104 to 107, and that's going to be a shortable range. Until that trend changes, you can use that trend line to trade against. All right, guys, next one I'm going to cover is Tesla. So Tesla, last video we did on Tesla, we had a target of 241 from this resistance, the low of this candle, the close of this candle, and the open and the close of that candle, and it was also the gap fill right there. So we hit that target dead on, and from there I liked it for either a consolidation, kind of a no-touch for me. I should clarify, I didn't necessarily like it short, but I definitely liked the taking profits up here at this range up here, and that ended up working out perfectly. Moving forward now, we've got a couple of things I want to point out. We've got a trend line that just broke. Here's the trend line with 3 touches right here. This candle, this candle, this candle, this candle right here, this candle right here, and then we broke below that right here. Okay, so we broke below that. We're below some support Next support that I'm seeing is really right around, and I'm just going to draw it right there. So right around 215, 216, as you can see, the highs of these few candles here, 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 and then on the underside, we've got support from the lows of this candle, this candle, this candle, this candle, and a couple of candles right here. So 215, 216, that's going to be support. Below that level, we've got support at about 204. So be aware of these levels on the Tesla chart. Next, I want to cover Netflix. So Netflix came up here to this downtrend line and we got rejected. As you can see, we've got 1, 2 touches here, 3, 4, 5, 6, 7 touches right here. This is going to be a nice trend line to trade against, and it will be resistance if we end up making our way back up there. At this moment, we're at a level that I do think Netflix could potentially get a bounce here, and that's because of the support from these few candles right here. Okay, and notice that's exactly where we made the low on Friday. We've got a gap up here to fill, and I suspect that we could fill that gap coming up here sometime this week. Below this 93-ish support, we've got support right around 87 or so. So right around 87 from these few candles right here, we've got support on Netflix. Resistance trend line, support 93 and 87. Next, I want to cover GILD, Gilead Sciences. We've got resistance at 87.60 from these few candles right here. And we've got support from these few candles here on the high side. It was resistance before, 1, 2, 3, 4, 5 candles right there. And then the underside was support on that level right there. So right around 83.75 or so is going to be that support. Below that is right around 81.50 for support on GILD. Twitter, we liked it for a long, once it broke out of this downtrend line right here. As it struggled here, we liked it for a short. Once we got this bearish engulfing candle right here, as you can see, it could not break over these highs. And then we got that signal right here that it was time to go short on Twitter. We mentioned that live in the chat room. And we're coming up to a potential bounce zone here on Twitter. We've got some ugly, ugly candles here on Twitter, but this is not really the area to press it short, in my opinion, until we get a close below this 1390 level. Okay, so why is this a big level here? We've got the low here, and then we've got 1, 2, 3, 4, 5, 6, 7 candles right here where that was the lows of the day, right around just below $14. So this is a potential bounce zone here on Twitter, and I'm talking about very short term, very, very, very short term bounce zone. If this breaks, we're going to be heading much, much lower on Twitter. Next, I want to be covering Facebook. Facebook, we got that downside that we were looking for. Last video we saw resistance at about 1850, which was right around here, as well as the downtrend line on the chart as well. And as you can see, which I mentioned before, we also had the MACD, which made no attempt to cross back above the signal line for Facebook. So now we have resistance up here at about 1776, as well as this downtrend line up here. We've got support at about 116. If we break below 116, we do have a very high chance of filling this gap down here at about 109, and that's from this close right here. So the gap is right there at 109. If we close below 116, we're going to go down and fill that gap down there. Indicators are certainly showing us that that is a high possibility. Notice how we're trending, I'm sorry, not trending, we're trading in a chop zone here on Facebook, yet we have MACD that is just screaming lower. Same thing with the RSI, which is the green line, screaming lower. All right, so resistance 117 as well as the downtrend line, and then support is 116, a break below that, probably going to fill that gap down there on Facebook. Next, I want to cover Amazon. So Amazon, we got that downside that we were looking for. We posted that in the public video last week. Reason was we were looking for a trend line break. We got that trend line break, and we saw some consolidation here. You can see that it was just kind of trading in this range here. We were making lower lows, and we finally got that break of that trend line on this candle, and then this candle could not break over those highs. So right here was really that strongest signal here on this day, okay? Because on this day, we had a break of the trend line, but it didn't break super hard, okay? And we didn't see a big bearish candle or anything like that. But then the following day, we weren't able to break over the previous day's highs, and we were consolidating right below that trend line, and we were creating a new downtrend line here. So right here was really the best risk reward opportunity to go short. Some of our members did just that and profited nicely. So moving forward now with Amazon, we've got resistance up here. We've still got the gap that is not filled here on Amazon at 727.65. So the close of this candle here, I'll show you the 15-minute chart and you can see it a little better. So you can see here, this is the gap. You can see here on Friday we gapped down, and we have this big gap that still is unfilled. So I suspect that we may fill that gap, and if we do fill that gap, that's going to be a good shorting opportunity for Amazon. Notice how, same thing with Facebook, we had MACD screaming down, and this is even a better signal here on Amazon, because as Amazon was heading higher here, so Amazon is heading higher here on price, we had the MACD which was heading lower. So that is a negative divergence, where if you look back on Facebook here, we were kind of trending down a little bit. You can either call this, so it was trending down here on Facebook, so it was kind of trading with the trend of the MACD, okay? So that's a bearish sign, but if you look at the Amazon here, you've got MACD, which was trending lower as price was heading higher. So it really gave you a warning sign ahead of time that we could be seeing some downside. Again, like I always say, you don't want to blindly short based off of MACD or a moving average cross. Some people do that, but in my opinion, you really want to see price follow through. All right, guys, thank you for stopping by. Again, go ahead and visit the homepage and start your 100% free 7-day trial today. Enter in your name, your email address, and you're going to get immediate access to all of the member benefits that we mentioned before. It's a great opportunity, and we would love to have you.